Hello traders, Gary Wagner here. It is 12 noon in Honolulu, 6 o'clock in New York on Monday, 7th day of April, 2025, and this is the evening report for gold and silver. Gold futures experienced its third consecutive day of selling pressure, with the most active June contract declining by $57. However, the potential recovery in U.S. equities were highly supportive of silver, which bucked the trend in gold and closed higher on the day. An interesting start to the week, with gold experiencing its third consecutive strong price decline, with today's action resulting in a drawdown of $57.30 or 1.87%, taking June gold below $3,000 to $2,998.80. Overseas, gold is slightly below that at $2,995.30. When we look at May silver, we can see that silver traded to a lower low and a lower high than on Monday. However, we did end up with a small green candle, meaning that silver closed above its opening price, unlike gold, which traded sharply lower across the board. It's most likely that the rationale behind this was the sensitivity of silver as an industrial metal to the potential that U.S. equities had been finding potential support and, at least for today, slowed down the strong percentage declines witnessed on Thursday and Friday. Silver gained 37.5 cents, a net gain of 1.28%, taking the most active May contract to $29.60.5 in overseas trading. Silver is a half a cent below $30 at $29.99.5. One thing that was extremely noteworthy with gold were spikes in volatility corresponding to spikes in volume and price changes. We are looking at a 5-minute candlestick chart that includes volume, and therefore you see different body sizes in terms of width. Gold opened roughly at $3,054, traded down to a low of $29.89 over the time period of 45 minutes, would move from these lows just below 3,000 at 3,075, only to have a methodical and slow decline back down until it made the lowest low of the day, slightly recovering, but recovering at around $3,000. The interesting thing are these upside spikes that were not sustainable, that actually resulted in gold, in essence, closing near the area or price point of the first price decline in the first hour and 20 minutes of trading. That being said, I believe that there is a reasonable potential that gold will find support at $3,000 per ounce, which corresponds to a couple of important factors. One, that is the 61.8% fib retracement of a data set beginning at 2875 up to the highs that were achieved on Wednesday and Thursday of last week. A 61.8% retracement is a deep but acceptable retracement and also lines up with these tops that occurred towards the end of February. The last piece of what I believe is compelling evidence to at least postulate that we could be looking at a potential support area, a point in which gold will reverse from its recent bearish trend back to bullish, is by looking at a 4-hour or shorter term gold chart with our Elliott wave count. Because what that indicates is that the highs achieved on Wednesday of last week were the conclusions of an intermediate fifth wave, which is established as a count or the intermediate wave 1, beginning on the 28th of February with gold at 2877, up to the conclusion right around 3,000, a wave 2 correction, a wave 3 going to $3,093, and then our corrective fourth wave, and then our final fifth wave. It also postulates that we have now seen an A, B, and C correction, and if in fact the ABC correction has concluded, it would signal the return to a motive phase and a key reversal in gold, moving higher and ending the correction that has occurred over the last 3 days. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.